Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about today's inflation number, how missiles can miss, and the concept of bond duration. But before we begin, as a reminder, this financial education presentation should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. This morning's inflation number showed an increase in inflation. What does that mean for the markets?
Hey, good morning, everyone, and happy Valentine's Day to all of you, as well to Allison, that unfortunately don't get to spend our Valentine's Day together for the first time in forever. But the question at hand is, what is going on in the markets after this morning's inflation reading, if you will? Well, I would say, to make light of it, you would say, well, the markets were in the green, but since Valentine's Day is a notoriously red themed type of day, then it would make sense that the markets would be in the red today in celebration of Valentine's Day. But that's not it. Markets are in the red today because of this inflation print that we got. So that's what you're going to hear about all day long on CNBC, at least. And potentially across the board, even though some really good earnings came in. You can see Palantir crushed earnings. They're the first quarter ever to be profitable. Down below, Nikki Haley, who widely popular, has announced her run for presidency in 2024, the first one other than Trump to do so on the Republican side. So certainly, Coke has, is just like Pepsi. Coke is a staple that's been doing well and poised to do well in a recession if we have one. So really, it's big time positive news across the board, except for this inflation thing. So rose 0.5 in January, more than expected, and up 6.4 from a year ago. So where does that leave us? Well, our next Fed rate hike, where we thought the Fed was going to pause and maybe not raise rates anymore, that's not going to happen now. Everything will immediately reprice today, factoring in at least another 25 basis point hike, or maybe even two. I think this is sufficiently bad enough news that they'll probably do two more rate hikes now, is what I would imagine. And of course, over the course of that, we'll have three more, I guess, new inflation numbers to again adjust from. But terrible news for the inflation story, or the inflation theme that we've been battling since January of 2022. Yesterday, the market was up, kind of anticipating that we would get a good inflation number, meaning a low one. Today, that indeed did not happen. So expect a red day and some more challenges for the market here in February.
Next, an F-16 reportedly missed its first shot at unidentified object over Lake Huron. How often do missiles miss?
Well, it's one of the funnier things. It's not just it's an F-16. I mean, the platform that took the shot's not relevant. Could have been it's easy as an F-15 pilot to make fun of the F-16 saying that's why it missed, but that's not the case. Any platform can shoot the missile. But what one of the funniest things I ever heard, I'd been flying the Eagle. This was 1999. I've been flying the Eagle for about 3 months. And we're talking about, I was going through the upgrade program. So you show up, you're already a fighter pilot, meaning you're qualified in the F-15, but you aren't qualified to employ the F-15. You spend your first, 3-6 months going through mission readiness training. So you're ready to go off and actually employ the F-15. Well, and part of it is how often and, how many missiles do you shoot when you really want to get the job done. And combat doctrine, if you're shooting against something that can shoot back, which is not the case here, but shooting against something shoot back, you generally shoot a couple, right? And it was like, okay, learning, right? And I remember our weapons officer, Yard was his call sign. He said, hey, they're called missiles and not Hittles for a reason. And I mean, brought down the house. Everybody was laughing that if they hit 100% of the time, then they'd call them Hittles, but they're not. They're called missiles, so they miss. So you shoot two, right? So it's kind of easy to remember in combat, heat of the action, life on the lines, with people shooting at you, sort of thing. Is crack, send a couple down range if you actually want to get the job done. Now, against something that doesn't shoot back, a balloon or let's see, what do we have here? Unknown octagonal object. If you believe it doesn't have weapons that's going to shoot back at you, which I think is the case with these balloons or aliens or whoever it is that's out there, is you shoot once and assess, right? You just watch your missile or have your wingman watch your missile if you have to turn away or whatever. But either way, you shoot and you assess, and if it doesn't bring the thing down, then you shoot again. And you could also hit it and not bring the thing down, right? Things don't spot. It's not the movies. Things don't spontaneously bust into a huge fireball just because something got shot at it. And folks are asking, why aren't we using the gun here? Well, the gun's a little bit difficult to employ at high altitude. You can do it, but there would be certainly some misses with the gunshot. Pointing nose up, at high altitude, missing, and then having to come all the way back down, get your speed up, and do it again. Plus, balloon, you could brittle some bullets through a balloon, and it might not even notice, right? And just tear some holes in it, but it's not like you're going to bring it down necessarily. So that's why we're using, I don't know why. That's why I speculate the military is using $400,000 missiles to bring these things down. But what can go wrong with the heat-seeking missile? Well, it depends on how hot this object is, right? When you think of heat-seeking missiles, you need contrast, right? You need a cold background and a hot source, or vice versa, right? Some differential to be able to for the airplane to see the heat signature, and then the missile has to actually see it too, because once you hit the missile, once you send it off the rail, then the missile has to guide towards the target and actually, impact the heat source. So whatever it's locked onto. If it loses lock in there, then if it loses complete lock, then it just goes ballistic, and of course it's going to miss. Or there could have been a mechanical failure with the missile. They're not perfect, right? Missiles, not Hittles. So it is not uncommon. You don't have to doubt your Air Force just because a missile missed. The Eagle carries 8 missiles. And another little, it's not classified. It's just a war reserve material management that, when you go to use missiles, you tend to use your older versions, not your newer versions, because each of these things come with a shelf life. So if you have, in a world where you had 4 missiles and you were going to, they have probably 400, but if you only had 4, and you had 2 that were old and 2 that were new, and you have something that's not shooting back, you would use the old missiles. Well, the older the missile, the more likely it is to miss because of the missile having an issue. So anyhow, don't sweat this at all. It kind of doesn't matter when something's not shooting back at you. You can afford to have one miss every now and then and just get the job done with the second missile.
Last, please explain the concept of bond duration.
Okay. Complex topic of the day. Simple in theory, complex in application. I was talking to my advising team yesterday, through an email. I kind of put out some things to think about, and what my goal for the team and the book is to increase bond duration as part of the 2023 strategy. So if I'm going to do that, I'm going to have to explain. I don't have to explain it, but I owe it to my clients to understand when there's some moves in the models as to what actually is going on. Well, the concept of duration is simple, and then we'll talk about application. It's a measure of sensitivity of the price of a bond and other debt instruments, so just think bonds in this case, to a change in interest rates. So sensitivity to a change in interest rates. When interest rates are moving, especially moving higher, you want short duration. You want your whole bond portfolio to not be very sensitive to the increase in rates, right? So we had that 75, 75, 75, 75, 50, 25. I mean, my goodness, just bang, 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 bang. Well, with your bond portfolio, you want to do what you can as a money manager to strengthen that duration so your bonds aren't losing as much money as the interest rates go up. However, when you think they're about to stabilize or only going to go up a little bit further, you want to start walking that duration back out. So how to do that? Well, that's kind of inside portfolio management. But you're starting to look for a little, get away from treasuries, start looking back towards the investment grade bonds again for your best return. So that's really how we use it. Let's see what we have for key takeaways here. Sensitivity interest rates from here, duration. Almost everybody that's paying attention in the fixed income world has their duration below a year right now, but I think they're going to start moving them back out to 2 or 3 years. What's normal? I would say 5 to 7 years is your normal bond duration in an environment where you are not expecting any interest rates to move. Let's see, when interest rates rise, the higher a bond's duration, the more its price will fall. So that's exactly what I was talking about. Time to maturity and a bond's coupon rate or two-factor that can affect bonds duration, yes, it's a huge equation, and you don't really want to get into it. All right, cash flow is not going to cover that. Modified duration, not going to cover that. And yeah, the bottom one's pretty good there. A fixed income portfolio duration is computed as a weighted average of the individual bond durations. So when you go to affect portfolio duration, you simply, a lot of bonds you're going to have in there, you aren't going to be able to adjust them, or you're not going to want to adjust them. So you use another instrument like an index fund that's fixed income that has a longer duration, and now start loading up on that, and you'll see the bond duration start to slide out. If I've ever sent you your portfolio review in Riskalyze, if you have bonds, the portfolio report doesn't have it, but the stats report that goes with it, that's buried in that stats report if you want to nerd out and learn a little bit more about your specific duration for your portfolio. But very important concept, especially as we get towards the top of interest rates, we want to increase bond duration out there.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar. We'll see you back here tomorrow.